Hi, good morning, good afternoon, and good evening, everyone. Thank you for joining us today. My name is Wayne Zhang from DMG Events in London, and I'm the producer of China LNG and Gas Summit, which will be held in Shanghai this October. So today's webinar is part of our World LNG and Gas webinar series. Previously, we had Chris Goncalves from BRG and Richard Nelson from King & Sporting to discuss the LNG contract issues and the COVID-19 pandemic. And last week, we had Andy Flower to talk about global supply and demand. So if you haven't got a chance to join those two webinars, you can access the recordings on the website of lnghub.biz. So LNG Hub is a free to join online community with lots of articles, webinars, and information relating to the LNG industry. We welcome everyone to contribute to that community. So today we are very pleased to welcome 4 experts from the industry. We have Dr. Zhu Xingshan from CNPC, Dr. Miha Maidan from Oxford Institute of Energy Studies, and Huang Miaoru from Wood Mackenzie. The session will be moderated by Dr. Pat Roberts. Thank you all for your great contribution. China might be the first country out of the lockdown and is currently getting back to the business. The discussion today will focus on the emerging trends of China's gas market. Also, we will have an outlook of China's energy demand in the rest of 2020 and going forward. We encourage you to submit questions to the panelists. You can type in your questions in the chat box at the bottom of the screen, and we will try our best to answer as many as we could. So once again, thank you very much everyone for joining us today, and I look forward to meeting you in our next webinar. I should pass to you, Pat, now. Thank you, Pat.
Thank you, Wayne. And hello, everybody, and welcome. Just after 8:30 p.m. in Beijing, around 1:30 in the UK, and around 8:30 a.m. on the East Coast of the US. We've timed this webinar to try and catch as many people as we can, and we're really happy to have more than 280 people registered for the dial-in right now. We're scheduled for about an hour, but some of that will be dependent on the questions that come in from the audience. And as Wayne said, please do submit your questions via the chat box at the bottom. They will flash up on my screen, and I will try to integrate those questions throughout the webinar. So Wayne has given you the title. It's the emerging trends in the Chinese gas market. And he's done very well, I think, in attracting 3 real experts, really, on top of the market, following it all the time. And what we've decided to do for this webinar is to have 3 presentations in quick succession. So we will have approximately 20 minutes or so of presentation. And then after that, we will have questions and answers. And as I said, I will try and answer or get your questions to the panelists to answer them in real time. And if we can't do that, then we will try to answer the questions post the webinar. So our agenda covers 3 principal topics. It's a current update of the status of what's happening in China at the moment. As Wayne says, it could be one of the first countries which is phasing out of the lockdown. So we'll be having a look at what that does to gas demand and LNG imports in 2020. We'll also be focusing in on the government's policy and their market price reforms and their agenda and key issues to look out for there. And the third thing that we'll be looking at is the power sector and trying to get a feel for whether the panelists are bullish, bearish, or neutral on the prospects for more coal to gas switching, given coal and gas economics as they stand at the moment. And then we will try to wrap it all up at the end to give some summary about what we see as the general overall outlook. So I would like to start by asking our panelists to give their presentations, And the first presentation will be from Dr. Zhu from CNPC, where he is the Senior Director in the Planning Department. So Dr. Zhu, I would ask you if you could give your presentation, and David, if you can load up the slides, please.
Thank you, Pat. Thank you, everyone. I'm very glad to have a chance to share my opinion on the recent changes on policy and the reform of Chinese gas market. First of all, I would like to tell you a good news. Beijing will lower their epidemic prevention level from level 1 to level 2. It means we will go normal soon. It's good for economic and gas demand. First slide. Next one. Thank you. I want to talk about upstream reform. China began the reform from year 2011. It's the first round of shale gas tendering. The shale gas will take us a separate resource kind in first time. In the year 2012, we began second round shale gas tendering, especially introduced private participations. In 2015, we began to give a public auction for gas blocks in Xinjiang. Some city gas enterprise joined in this block public cautions, like Beijing City Gas Company. Everyone have a member in China. 2017, we have a very big gas shortage because of the coal to gas switch is go too fast. The gas demand is grows very fast, but the supply is not go so fast. So we have a gas shortage. At that time, the China State Council announced a reform plan to our oil and gas industry, encouraging eligible enterprises to participate in exploration and production to create a market-oriented mechanism which allows diverse forms of ownership to enter it. Then the reform procedure is go fast and speed up. In year 2019, the Chinese government announced reform plan to bring private capital into the upstream sector and opening up the industry to firms other than state-run energy giants like CNPC, Sinopec, and Sinopec. Out of these three big companies, China will allow foreign companies to explore for and produce oil and gas in the country, even without a local partner. it means they can have a block independently instead of in cooperation with local partners. The important thing is we have a 7 years plan, greatly increase the production because of the gas shortage. CNPC and Sinopec and CNOOC all have the 7-year plan to increase their domestic production of oil and gas. Please, next one. Now, let's look at the midstream reform. The first one is the interconnection of infrastructure. It's because in the winter time we have a peak load. Because of the pipeline is belong to a different company. It's not connected to each other. So we can't to transport the gas from south to the north. So we decided to interconnect these pipelines so that we can transport gas from south to the north in the winter time. The second one is the government mandate on gas storage capacity by year 2020. The wholesale suppliers, their target is 10% for the whole sales. City gas distributors should have 5%, and the local government should have 3 days storage for the local energy consumption. The third one is create demand side management, and peak shaving mechanism is also because of in the winter time, and the gas shortage is very severe. So we should shut down some electricity power users or industrial users to ensure the residential usage. The fourth one is improve pricing mechanism of city gate gas price. In other words, is we will deregulate the price of city gas price and give them flexibility for the gas pricing. Let the gas supply company to decide the city gas gate price, but their flexibility is also controlled by the government. The most range is 20% higher or lower, especially for the higher is limited, lower is not limited. The fifth one is open third-party access to the infrastructure for the pipeline and the LNG receivers and the storage. The sixth is independence of pipeline network. In the last year, in the end of last year, we set up national pipeline company called COGPNC. After that, we set up a pattern of X plus 1 plus N plus X, the market structure. The first X means upstream. We have a lot of company to exploration and produce the gas instead of only 3 companies. One is the pipeline company, COGPNC. It's regulated by the government. And the N means the provincial pipeline network. Now we have a provincial pipeline company in Guangdong, Zhejiang, Guizhou, Guangxi province. And the last X is the city gas contributors. It's many city gas contributors. The next step of reform is the provincial networks will gradually cancel unified purchasing and marketing model. They were like the national pipeline company. They will not sell the gas, only transport the gas. It's a direct direction of the reform. And the last one is reducing pipeline transmission fee. We will lower the gas supply cost because we have a lot of cost on the pipeline. I think this fee is too high compared with the foreign countries' pipeline fee. The pipeline fee is regulated by the government. They want to lower the transmission fees. The last one is downstream. China opens city gas sector to foreign investment, remove the restriction on foreign company to be majority shareholders of any city gas distributor to cities over 500,000 residents. In the past, the city gas company must be controlled by the local or domestic companies. Now it's not so limited. The second one is pricing standard. No installation fee. This fee is cancelled. It's not allowed to allow the gas company to get such fees. It will lower the end use price to benefit to the consumers. The second one is soften the coal to gas switching policy. It means we will develop the coal to gas users depend on the supply capacity is not overdeveloped. The users is avoid that situation. The fourth is to limit gas usage in power and transportation sector. It also because of the gas shortage, the government set up a policy to limit gas usage in power and the transportation sector. It is in order to ensure the residential use in the wintertime. In the fifth one is reduce gas distribution fee. Like the reduce the pipeline fee, the city gas distribution fee is also to be decreased. The last one is direct and support contributions allowed. Especially after the national pipeline company and set up and the local pipeline company and reform, the supplier will supply gas to the end users directly through the pipeline. Is not necessary to via the provincial pipeline network. And if you use LNG to supply the gas, it will be allowed also. It is not necessary to transport the LNG to the local pipeline. It's also get a station near the users, then to use it.
Okay, well, look, thank you very much. Thank you very much, Dr. Zhu. In 3 slides, I think you've summarized there for us quite a lot of the changes which are going on through the whole of the gas supply chain. We do have some questions coming in from the audience, so thank you for those, and we will try to address those later on in our Q&A session. So please keep the questions coming in, and I will try to address them and point them at the panelists. We'd like to move on now to our second panelist, who's Dr. Miha Meydan from the Oxford Institute for Energy Studies, where Miha is the director of the China Energy Programme. So Miha, over to you. And David, if we can have Miha's slides, please.
Thank you, Pat. Hello to everyone from London. It's lovely to be joining this fantastic panel. What I wanted to do today is to follow on from Dr. Zhu's, I think, extremely comprehensive presentation about reforms and see whether or not in the current market conditions, they will support China's not just gas demand, but also LNG demand this year. And I guess the title is a bit of a giveaway. I think, you know, they will be supportive, but the question is how much. So if we move to the next slide, please. I think we have all seen in various metrics and formats the extent of the hit to the Chinese economy in the first quarter with quarantines and lockdowns. We saw Q1 GDP contract by 6.8% year on year. That was the first time pretty much ever that Chinese GDP has contracted since the Cultural Revolution. And I think a lot of China watchers were a little bit concerned that the need to, or the government's focus on growth, the exit strategy, the recovery throughout the end of the year would lead to a very singular focus on reinvigorating the economy, meaning that sort of the reform agenda would take something of a backseat. And as Dr. Zhu has just presented, that's certainly not the case. The fact that we have very low gas prices is of course very helpful to that, but still it's sort of a good sign that reforms are continuing. Perhaps another good sign that the market has taken has been the strength in, at least in implied gas demand in China. When we talk about implied gas demand, this means net imports and production. In Q1, they were both up year on year. And so, you know, Q1 LNG supplies were 28 BCM. I mean, in terms of net imports, it was 34 BCM. That was kind of a 1 BCM increase year on year. Really, the bulk of the increment came from domestic production. Now, that might have given the markets of some sense of, well, relief that maybe China's gas demand has emerged unscathed from the economic standstill. I think if we turn to the next slide, that's perhaps a misleading view. What we don't have for China is data on storage. And so we don't know how much of that gas that has been imported into China and produced in China has actually gone into storage. We do know anecdotally that the force majeure that some of the LNG importers had to declare was because stocks were full. We've heard again that PetroChina has started its injection season, its storage injection season, over a month early, and which suggests that really storage was very, very full. And then the actual demand, so what was actually consumed by end users, was much lower than implied demand would suggest. When you speak to industry, when you look at some of the assessments coming from the different sectors, actually the demand loss was probably around 8 to 10 BCM with, I mean, industry is the biggest user and that took a big hit. To be fair, commercial demand took the biggest hit in terms of percentage, but commercial is a smaller user, and so the kind of impact in terms of BCM of actual volumes was a bit more muted. And the small uptick in residential consumption was probably not enough to offset that weakness. And so we estimate that we've had, again, an 8 to 10 BCM demand loss, so roughly 7%. If we take a step back and you know, try and sense check if this makes sense, then as you can see from the chart on the left, China's GDP and gas demand have actually been quite closely correlated historically. You can see gas demand diverging and sort of rising faster than GDP from 2017 when we had the government mandated coal to gas switch, and so a policy push to increase gas demand faster than GDP. But essentially, it would make sense that gas demand would fall alongside GDP. Again, this is sense check because we haven't had we haven't had GDP fall in China, and so we don't really know what that would look like. But again, we do think that there has been a loss in terms of gas demand. So what does that mean going forward? If we look at the next slide, please. What happens as China gets back to work? So first of all, I think we have to bear in mind that the strength in implied demand, again, the imports and production, suggests that there's an overhang of gas even within the domestic market. And as China returns to work, we will need to see how strong the economic uptick. What we're seeing so far is that the kind of stimulus that's being rolled out is by no means a repeat of 2008 to 2009. It's not a commodity intensive stimulus. The focus is on small and medium enterprises, it's on consumption, lots of questions about what happens in the real estate sector. But where I think the good news comes in for the gas market is really on the policy side, combined with lower gas prices. The fact that the government is allowing more actors into the system and the midstream company will allow third-party access means that non-state actors can capitalize on cheap spot LNG. The fact that oil prices have collapsed and therefore we will see a drop in oil indexed term contracts later in this year will also help. And we heard that Dr. Zhu saying that LNG can now be sold directly to end users at times and doesn't have to go through the Citygate prices. Again, that should support demand. In transport, it's actually one of the more competitive areas, even though again it's not the biggest consumer of gas. That there has been a cut to Citygate benchmark prices, and again the fact that provincial governments will gradually be allowed to set their own prices will make way for more cheap gas into the system. There's been a mandate to expand storage. Again, all these things are contributive to higher LNG demand. But as you can see from the chart here, Chinese domestic prices are still well above JKM, spot JKM, and it will take time for those prices for the imported LNG and the wholesale prices to start reflecting the lower international costs of both oil and gas, and to feed through into that uptick, and therefore increased appetite for LNG. Let's turn to the final slide and try to kind of wrap up and summarize this. So overall, it looks like it's not all doom and gloom for Chinese gas demand this year. At the beginning of the year, we were expecting Chinese demand pre-COVID. We were thinking of a sort of 30 BCM increase in gas demand. That is not going to be the case, even with the government support efforts and measures. We think it's probably going to be more like 15 BCM. But again, if you think back to that kind of GDP and gas demand correlation, if we get what the IMF is talking about, 1% growth in GDP this year, we could be seeing 3 to 4% increases in gas demand, again, roughly 15 BCM. Cheap LNG is an important part of that, but because of the focus on domestic upstream, LNG is unlikely to account for all that increment. So we're probably going to see 7 to 8 BCM or even slightly higher of domestic production, and again 7 to 8 BCM of additional LNG flows into China this year. So in a way, the good news is that Chinese demand likely recovers. It's not as strong as it would have otherwise been, but it recovers later in the year and provides some support. But if we're thinking of anywhere from sort of 7 to even 10 BCM, and 10 BCM is a huge amount of incremental LNG imports this year and not the most likely scenario, again, that's good, but it's far from enough to soak up the excess LNG that we have coming into the market. Let me stop there and turn it back to Pat.
Fabulous presentation, and thank you for being able to hold that all together so concisely, Miha. When you consider what is going on in the world, which is sort of like one of the toughest economic environments, health, wealth, everything is being sort of turned upside down, to be able to say you think that China will actually increase its gas demand, sorry it's not as good as you thought it was, but it's good, is an enormously powerful message. So thank you for that. David, I'd like you to see if you can load up our third panelist's presentation, please. And I'll be introducing Miaoru Huang from Woodmac. Miaoru works in the Beijing office as the Senior Manager for Asia Pacific Gas and LNG. And over to you, Miaoru, for your short presentation.
Thank you very much, Pat. Hello, everyone. So I will start, my presentation will be a little bit more focused on LNG and the supply side. Please turn to the first slide. So I think the previous two panelists already talked about the LNG and prices of LNG are going to fall in the rest of the year. And here I just would like to put that into numbers. So on the left-hand side, we are expecting that with a few months lag time, China's LNG import prices will drop significantly. And on average, we expect this year, China's average legacy LNG import cost will drop by about $3 per MMBTU. So not only LNG will become much cheaper than the pipeline imports from Central Asia, mainly Turkmenistan, but also LNG's prices will went below the city gate price benchmark on a delivered basis in the coastal markets. So that's one of the major supporting factor that we expect China's LNG imports to increase this year. And the other supporting factor is that we are seeing that there are more and more non-NOCs. Now they have direct access to global spot markets. So although in terms of the total imported volume that they can handle, it is still quite limited compared to the big chunk of import portfolios by the NOCs. But under this environment, we do expect those emerging buyers, they will try to maximize their import capacity as much as possible to benefit from the current low LNG prices. So moving to the next slide, please. Well, while economically LNG is quite attractive now, China's LNG imports this year, unfortunately, will be limited not only by the overall gas demand weakness, but also by a very strong domestic production potential. So the graph on the left-hand side shows our preliminary view on supply this year. And we all know that in the past 2 years, the Chinese NOCs have re-emphasized domestic upstream investment. And we expect this year domestic production will continue to be prioritized because it is important in terms of energy security consideration. And economically, it is also important to local economic growth, employment, and tax revenues, etc. Well, can China accommodate all the supply sources? Ultimately, it is dependent on the gas demand recovery in the rest of the year. But here, I would also like to highlight a bit on the storage. So Mika also talked about that the storage may help to absorb the gas supplies already in February and in March. And also for the audience familiar with Europe, you probably are very familiar with how massive storage injection in Europe last year play a key role in balancing the global energy markets. While in China, China's storage capacity is still very insufficient, but we are going to see the capacity to continue to increase this year. In fact, underground storage capacity is the only binding target set in China's 13th five-year plan. We think that target can be achieved, and the storage injection will provide some relief to gas suppliers, although ultimately it's still very much dependent on the gas demand recovery to balance all those supply sources. And moving to the next slide. Well, I think that 2020 is not looking a good year for the global LNG suppliers. But will China's LNG demand continue to grow beyond 2020? Our answer is yes, but the pace of growth is very uncertain. And looking at the next 5 years, we think there are 3 key themes to watch. The first is about overall gas demand. I think that Chinese policymakers will find it even harder to balance between the environmental goals and energy affordability in the next 5 years. If there is a greater emphasis on cheaper energy sources, mainly coal in China, that will pose downside risk to gas and LNG demand. And that will become more likely when economic further slows down. The second is that infrastructure build. Currently, there are lots of regas terminals which target to start up in the next 2 to 3 years. If they were commissioned on schedule, the regas bottlenecks we saw during winter times will be gone. And that it is actually very good for LNG imports. And of course, the game changer will be whether the setup of the national pipeline company will facilitate more open access, not only to regas terminals, but also pipelines. If that something can be materialized in the next few years, we think that that will also attract more and more non-NOC LNG importers into the sector. And the last thing is really the role of local governments. So Dr. Zhu talked about the further price deregulation and also the importance of the provincial grid companies. We think that with further price deregulation and those infrastructure becomes more available, actually local governments could play a bigger role in shaping the gas markets. So in the past few years, we've already seen that some local state-owned energy companies, they step up to diversify energy supplies and by importing the more LNG by themselves. And also apparently some wealthier provinces, they have a stronger willingness to fasten energy transition, as well as make gas more important in their energy mix. So that is something we are watching for, and we also think that the current infrastructure development and market reforms will actually benefit more LNG than other supply sources in the next few years. So that's the end of my presentation. I'll pass it back to you, Pat, and I'm happy to take questions.
Thank you very much, Miru. Okay, and the questions are indeed coming in from the audience, so please do continue to sort of post things into us, and I will try to organize them and put them out to the panelists. So first of all, thank you very much. I think the three of you have taken quite a comprehensive look across all of the topics that we wanted to cover today. So I'm just going to, first of all, I think start with Dr. Zhu on the policy and the reform. So if we understand correctly, there's quite a lot of plans here for reform, and these are going to be going ahead, which is a positive thing. The questions which are coming in, Dr. Zhu, around the upstream, first of all, is a question of how does the government ensure that the wellhead prices will be high enough to prompt a lot of upstream development in China?
Okay. The upstream opening is allows many other companies, include the foreign company and the private investors to come into the upstream area to exploration and produce gas. But the pricing system or mechanism is very important. If the price is regulated by the government, the upstream investors could limit their economic benefit. So the next step where I send you a new PPT. We add some two items to the reform. The first one is the new version of central pricing catalog. It point out only domestically produced pipeline natural gas and the imported pipeline natural gas via the pipe put into operation before year 2014. Only these two kinds of gas were still regulated in price, and the other kind of gas is free, is not regulated, include LNG and the newly imported natural gas from via the pipeline. So only the domestic produced, if the gas into pipeline were still regulated by the government. If you're not into the pipeline, it's free. It's where pricing by the company itself. So you can sell the gas you produced by other transportation manners, not through the pipeline. And secondly, the pipeline and the contribution fee will decrease in the future. So the price of the wellhead, I think, will have some room to increase some wellhead price.
Okay.
Yes.
Okay, thank you. A question now, that there's a variety of questions coming in about the China oil and gas national pipeline company. Mihar, a question to you. It's basically around, what do you think the overall impact that company will have on global LNG imports into China? Do you think that they will, this is a period over the next few years, do you think that that will rise significantly? And another question added to that is, do you think you'll soon see auctions of spare capacity from, this is LNG capacity, so regas capacity, I assume?
Yeah, I mean, that's a very good question. I think the idea, of course, is for the midstream company, and it's not just the midstream company, but it's this whole idea of midstream reforms, which should facilitate third-party access, right? So the midstream company is sort of the embodiment of this, and the fact that the midstream company, a number of regas terminal assets have been transferred into it, suggests that there should be improved third-party access, and that should support LNG demand, right? Because especially, or as long as LNG prices remain low. I think that is kind of where I think the market is assuming that that's the outlook for the next couple of years. I think all this changes quite dramatically if gas prices were to rise, right? Because I think part of and Dr. Zhu presented this as well, the reform agenda is to open up, to liberalize, to increase third-party access, but to keep gas prices low or manageable for end users, especially residential users. So now we're in a good period for that reform because gas prices are low. And so in that context, yes, COGNPC will help that. Maybe not this year, because we still don't know exactly what the costs are, what the import costs are going to be, what the transfer costs are going to be, and what the kind of final contracts are going to look like. So I think in the near term, it's actually just the fact that there's more spot LNG sales that are allowed directly between suppliers and end users that will be supportive of LNG demand sort of this year. And sort of, again, as we get more clarity about the company, we will see how it works. But I think it could go either way, to be frank, to be very honest, because if the costs are high, then it becomes, again, prohibitive for end users.
Okay, good point. I'm going to move on now. There's a variety of questions coming in about the LNG imports overall into China. And a question here, Mioru, maybe you can take this on. It's saying China has agreed to import much more energy products from the United States. Is there any clarity over how much LNG will be part of this agreement?
Well, that's a very good question. So actually, I think the details of that agreement has never been published, made available to the public. So we only know that China commits to increase the energy purchase, product purchase from the US in the next 2 years, including this year. And then actually we think that oil and oil products will need to contribute to a major part of that increase. And then for LNG, I think there's some limitation here, as we discussed here, that the gas demand drop is unexpected, and there is less room for LNG import to grow this year. So it is really risky that whether China can increase a lot, not only US LNG, but also other additional LNG imports in the next 2 years. But the good thing is that some obstacles has been clear, like China already waived the additional 25% import tariff on US LNG. So we have already seen that LNG from the US has started to flow again into China. So that at least that's a good thing. And then also, I think some discussions stored has been between US and China buyers have been stored by the trade watch. Probably there's some opportunity to open up those discussions again. But fundamentally, we still need to wait for China's gas demand to recover, and we need to wait that China is able to, again, back on the track to take more LNG.
Okay, thank you. Another question for Dr. Zhu. This has come in saying that in past years, China has missed a variety of targets that it has set itself for unconventional domestic gas production, so both shale and coal bed methane. In your view, is the outlook for Chinese domestic gas production more optimistic than in the past? And if so, what has changed?
I just mentioned that the 7 years plan is very, very strong and pushed by the central government. The increase, the gas increase mostly come from the non-conventional production, mostly from the shale gas. The coal bed methane, the production is very limited, is not enough to increase. It's have a good challenge, very big challenge, because the technology is very difficult and the cost is very high. It still needs some policy to support the shale gas production, and the company will do much effort for innovation and the management innovations. If we do these things better or do well, I think the target can be realized.
Mm-hmm. Okay, just to tell the audience, I can see that you are sending in questions about the prospect for coal to gas switching. We will come on to that in the power generation sector. We will come on to that shortly, but I'm just trying to group all of the other questions into themes, which will help us work through all the questions. So please bear with us. So my next question, and I think here, I'd like to, let me just see. Okay, here is a question. This is a general question about LNG contracts and the spot prices stimulating demand, which I think has been mentioned by the panelists. A question coming in here is just saying, looking at the longer term, it is great to have, price sensitive demand created by low spot prices, but what do you see happening when prices rebound potentially in the coming years? Will China nevertheless carry on with its gas build, or will you think it come under economic pressure in the future? Perhaps Michal, you could take that.
Sure, I think that's a fantastic question, and I think it's very much sort of uncertain that the trajectory for gas demand growth in China has been extremely volatile. We've seen big increases and then big slumps, and we don't really know, because perhaps slightly simplistically, you could argue that China's gas demand has not really been price sensitive. If you saw Miao's chart on wholesale domestic price, on benchmark, Citygate benchmark prices, they're anywhere between 8 to, depending on the city, depending on the sector, from $8 to $11 per MMBTU. The fact that we're getting $2 spot now is not moving those Citygate benchmark prices yet. Now, the theory again is that in the near term, as these price reforms advance and international prices, be they oil indexed or LNG spot prices, are low, you could get a bump up in demand because of those low oil prices. But if the idea is to protect the residential and the end users, then again, as prices increase, I think the system will be tested in terms of its ability to sustain higher, sort of more costly LNG. And so I think that's really is the crux of the problem for China, is that it wants to liberalize the gas market. And we're seeing it as well in protecting the upstream, right? The majors have been told to go and drill, and they're going to do that even though oil and gas prices are plummeting, because that's what they've been told to do. You're getting very strong policy signals in this market. The second you start to erase that and bring in the pricing signals, then you inevitably lose control over that sector. Again, right now with low prices, I think the government is relatively confident that it can advance and promote its its priorities, but it becomes a very tricky trade-off if and when prices start to go back up.
I think you've given us the perfect lead-in to talk about coal to gas switching in the power sector then, Mihar, because you've got a situation where spot LNG prices calorifically are very similar to spot coal prices. And when you take on board all of the sort of supply costs between coal and gas, you should say that, you know, the coal to gas switching pricing band is now opening up. So I'd like to ask a question to all of our panelists to get your own views on, do you think there is going to be a very positive response due to low spot prices to see more coal to gas switching in the power sector in 2020? And I'd like an answer from each of you. So perhaps I could start with Mioru first, and then Dr. Ju, and then Mihar, to give you some chance to think about this one.
Yeah, sure, Pat. So as my first slide mentioned, there are a couple of non-NOCs. Now they have direct access to the global spot markets. So if some of them are actually power generators. So if they can import the LNG at the spot prices, and currently that will be more competitive to coal power generation. But for most power generators currently in China, they're still facing the domestic pricing, which is around the Citygate benchmark levels, and that's around $8 to $10 per MMBTU, and sometimes it's even higher if you added the local transmission and distribution tariff. So for them, gas is still a more expensive option than coal power. However, for this year, actually, we do forecast that in the power sector, gas demand will grow faster than non-power sectors. So first is that we are seeing that there will be new generation capacity coming online this year. So in terms of capacity, we are expecting that there will be a 14% increase this year. So that will boost gas power generation. The other is that although on the average, gas power generation is still more expensive coal, but compared to previous years, given that the average cost of gas supply into the coast China will be lower, so there will be less pressure for the fuel pressure for those gas generators. So that will also improve a bit the utilization rate of those capacity. Mm-hmm. So not enough to stimulate new project investment, but should provide some relief to the operating fleet.
Okay, thank you. Dr. Ju, what is your view about the ability for China to have more coal to gas switching in the power sector this year?
Yeah, I think if we'll have a low price gas, more low price gas, surely we will switch more coal to gas in power sector. I'll give you some figures. In April, South China grid shows that data. The gas power capacity is increased 8.5% the gas power capacity increase. And the gas used for power sector increased a little.
Mm-hmm.
Some other sector, the gas consumption is a little decrease, but the power sector is a little increase. It shows that the lower price were very helpful for the gas power sector gas consumption, especially for the coal switched to the gas.
Okay, thank you. Miha, what is your opinion?
I mean, I think, you know, as I mentioned as well, I think low gas prices are supportive for demand, but I think we should be careful when we talk about coal to gas switching. I think there are sort of two strands. First is coal to gas in power specifically, and how much power plants move away from coal and favor gas. That is happening. We've heard it from Dr. Zhu, we've heard it from Yaru, but in China, gas is a tiny part of the power stack. It is under 5% of total power consumption. And in terms also of overall gas consumption, it's roughly 60 BCM of the 300 BCM consumed last year. That's not where big gas demand is. So I think when we look at it from a European perspective, we think gas and power. But in China, gas is used overwhelmingly by industrial and commercial users. And when we think about the coal to gas switch and the policy push in 2017 and 2018, that was in commercial, industrial, residential heating. Here, I think the prospect of more coal to gas switching because of gas prices or because of low prices is more limited, because it depends on infrastructure and on city gate prices and the price reform. So I think we just have to be careful. Yes, you know, a 14% increase in gas power demand is huge. That's roughly 10 BCM. When we were talking about huge increases in commercial and industrial demand because of the policy push, we were looking at 20 to 25 BCM increments in demand. So I think we just need to be careful which coal to gas switching we're talking about.
No, that's an excellent point. Okay, thank you. Okay, I appreciate we've gone over our 1 hour. We do have other questions coming in, and we do have still a very high audience on the line. So I would like to just carry on for a few more minutes to carry on putting some of the questions to the panelists. I have a question here saying really about the balance between imports by pipelines versus LNG and how those decisions are going to be made. So this is a question specifically to sort of say we've got a lot of oil indexed pipeline gas versus oil indexed LNG term, but also a lot of spot LNG. Miru, you indicated in your presentation, I think you had about 7 to 8 BCM more of pipeline gas and about 7 to 8 of LNG. Of the split that you gave us there, could you just go into a little bit more detail about how you came to that? Is that led by price, or is that led by specificities in the contracts in terms of volume flexibility?
Well, actually, we've taken into account both some policy considerations, such as we think that domestic production will be prioritized, even though the energy prices will be lower in the rest of the year. But we also taken into account some infrastructure constraints. For example, if the storage will be fully utilized, not only underground but also the tanks at the terminals. So even though prices can go even lower, but the LNG importers, if they don't have storage to put, all the downstream demand won't be recovered, then there's nothing they can do with even lower LNG prices. So in terms of the split between LNG and pipeline imports, we take into account some of the corporate considerations and their contracts. So some panelists talk about that China issued the FM notice to some LNG suppliers, but reportedly those have been being rejected. So there's a certain amount of contracted volume that Chinese buyers are expected to take anyway. So that will ensure that the import. And then in terms of pipeline imports, there's some flexibility to reduce the flows from Central Asia. And actually, we already see that the pipeline imports decreased year on year in 2019. And we do think that there's some room further for PetroChina to optimize their LNG and pipeline imports, as well as maybe to some extent domestic production as well. So last year, like PetroChina already decreased its LNG imports to accommodate more domestic production. So this year, based on our analysis, we think there's still some room to suppress a bit the pipeline imports. Although the imports from Russia will continue to increase, and a reduction in pipeline imports will mainly coming from Central Asian countries.
Okay, thank you. We've got a variety of questions coming in, and a lot of thanks from the audience of your comprehensive sort of presentations and discussions this afternoon, looking at what's happening now. But some of the questions are coming in of looking further into the future, like the years 2020 to 2025. So I have one question which I'd like to ask Dr. Zhu to prepare your answer, which is, with all of these reforms which are happening, what do you think the Chinese gas market will look like in 2025? Do you think there will be a successful response to requiring or asking for foreign investment in China? So that's the question I'd like to ask to you. The question I'd like to ask to Miha is, again, regarding reform in some way, what you see, you talk about quite a rocky road and quite sort of a volatile road. Can you give us some sort of signposts for some things that we should be watching out for over the next few years? And my final question to Miaru, which I want to make, is I think people have been quite grateful to you for sort of trying to give us some perspective here on LNG. And the questions still keep coming in about US LNG here, and reports of cancellations and diversions of cargoes, and just how much sort of LNG do you think, when things start to settle down, will really come from the US? So those are my three final questions that you can prepare for. Dr. Zhu, if we could come to you first, please, to say, what do you think the world will look like in 2025? Well, not the world, but China and its reformed gas market.
Okay. I think in the time change, the reform procedure is going on. I think it will be get fast, the reform procedure. By the year 2012, year 2025, I think the market, the free market, basically will be formed. We will welcome the foreign investors to our upstream area and the midstream area and the downstream area, include the city gas. I think it depends on the economic benefit. If you think we can earn money from China's gas market, you will come. I think it will be not not any limited for the investors.
Okay, so are you quite optimistic?
Yes, 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 yes.
Okay, Miha, you had the question from me about sort of the rocky road that you talked about, but some of the key pointers or signposts that we should be looking out for.
Thanks, Pat. An easy question to end up with. I think, I think a couple of things. First of all, the new midstream company. How long will it take us to get a sense of the cost structures, not just the asset transfer, but cost structures, right? How much does it cost to transport on and to use that? And I think because that also leads to some contract renegotiations. Now, I think that's probably a 2-year process rather than a 6-month process. But that's the first question. How long does that take? And again, if it's a 2-year process, then it's a much more protracted kind of reform trajectory then I think maybe the markets are expecting that it's going to be very quick and it will be perhaps effective, but these things take a long time to negotiate. But a second one is the number, and sort of related to it is the number of private regas terminals that we see coming up in the next few years. I think through 2023, there's something like 70 million tons per annum of planned regas capacity, with a huge majority of that by non-state actors. Now, how much actually gets built and how much of that actually gets built by non-state actors, that will again attest to the confidence or to the progress of the midstream reform and how confident private companies in China feel about the future of the market. And the third signpost, I think, will be the 14th five-year plan, not just the targets that it sets for gas consumption, but also the way it deals with coal and sort of clean coal, because I think that will be hugely important for the power sector. And all this to say, I mean, I still think that by 2025, we get 450 BCM demand in China. That's 150 BCM increase in the next 5 years. It's not a small number. But for those throwing around a 500, 600 BCM number for 2025, I think we need to scale that down, because my biggest concern is that, so these reforms will continue. That is the kind of government's plan, and that will happen. But if they continue too slowly, then perhaps gas will not be competitive versus clean coal and renewables and other liquids to make a meaningful, sort of a more dramatic increase than the one that I think, than the 450 BCM number that I cite.
That's great. Thank you very much. And Miharu, your final question. It's a variety of questions coming in from the audience, which sort of goes back towards China importing US cargoes. And it's sort of saying, at the moment, there are some reports that China was importing US cargoes. There's some reports of cancellations and diversions of US cargoes. But it was looking also towards the longer term to say, do you feel that the US LNG will become part of the sort of import mix for LNG into China?
Yes, I think actually that we do see that while this year is not, China may increase its LNG import a bit, but longer term, Wood Mackenzie, we do expect China's LNG imports will continue to grow and actually to break the 100 million ton per annum mark around 2030. And I think from the perspective of diversifying the LNG supply sources, as well as energy security, etc., it makes sense to have US LNG as a part of the supply mix. And also, I think that also US LNG is a way for more Chinese companies that were originally interested not only in US LNG, but also in the US upstream or domestic gas markets, is a way for them also to maybe open some opportunities to participate more in the US LNG markets. But I think the premise is that US LNG should prove its attractiveness to Chinese buyers in the longer run. So we know that the majority of the current contracts, they are priced off Henry Hub prices. And depending on what your oil price will be in the future, that could make Henry Hub pricing more expensive or cheaper than the Henry Hub prices. So it really depends on the like what pricing mechanism, what kind of flexibility also the US LNG suppliers can provide to the Chinese players.
Okay, thank you. Well, look, I'd like to, I think, draw this webinar to a close. It has, I think, opened up a huge topic of real interest to everybody here. We are an optimistic group in the global LNG business, and you see now, despite some of the hardest things that have happened in our history this year, you do see lower prices, you do see reforms in China, and China was always expected to be a very significant part of the growth of the global LNG business over the next 5 years. And I think between the three panelists, I think you are all giving us some optimism here to say that China will play quite a significant part in the global LNG business in the years to come. Yes, there may be some rocky roads, there may be some sort of things to look out for that may moderate the speed at which things happen, but directionally, you know, the direction of travel is very positive. I'd like to end therefore the webinar here. We've had a lot of questions in. If we haven't been able to specifically answer your question, we will keep a log of everything that was asked, and we will try to get back to you. So I would like, first of all, to thank very much the three panelists who have taken some very diverse questions, and you've handled it really very, very well, and you've given us a lot of information. And I'd like to thank very much as well all of the audience. We're still at a very high participation who are dialed in and on the line. I hope you enjoyed this, and I hope that it's given you some insights and it's given you some optimism for your day about what China can really contribute to the global LNG business. If you have any ideas of other topics you'd like us to cover, please let us know. We're very open to discuss these things. And a recording of this webinar will be made available quite shortly to you, so that you will have a record of it. So with that, I would like to draw things to a close and say thank you very much, panelists, thank you very much, audience, and we look forward to seeing you or hearing or participating with you all in the near future. Thank you very much and goodbye.